One asset in particular has been flying under the mainstream radar, but has been exploding ever since the beginning of June, and that's silver. What's next for silver? Huge up moves, 15% move in just a span of 2 weeks. It's had a bit of a breather in the last couple of days, but we'll find out what's next with our next guest, an expert on the silver space, an expert on mining. He is Jim McDonald, CEO of Kootenay Silver. Interesting developments with that project as well. Welcome back to the show, Jim. Good to see you.
Yeah, great to be back, David. Pleasure to be back.
You're on, well, just for context for the audience, you were on in my show exactly last year in the summertime, late July, and almost a year ago. And back then, you were calling for silver to go much higher for a lot of the reasons that have transpired: tariffs, uncertainty, geopolitical tensions. You were absolutely spot on with your call. You were calling for silver to go above $30, and it has. In fact, it's gone above 35. I think you've called for 35, and now we're looking at $36. So people can check out our last interview with Jim. Link down below. $37 though. People are looking at this price, and it's starting to look a little overbought, according to some traders I've been talking to. We've retraced the highs from 37.5, and now we're down to $36. But it's still a considerable run up since basically the beginning of May, when it was trading at just under $32 an ounce. So the interesting thing that I've noticed about silver is that it was moving on its own, independently of gold. If you just take a look at my screen now, Jim. This is the silver chart, and if we compare this to gold in the last month or so, you can see that silver has moved. This is the silver chart here. The silver line is the bar chart. So silver has broken out on its own without gold moving much. I mean, what happened there? Why was that the case?
That's a beautiful picture, by the way.
Okay.
Well, what's beginning to happen is it's reverting to the mean. When you look, and what I'm saying is the gold to silver ratio. So it has swings up and down. It's certainly not steady, never has been, never will be. But the mean over the last 30 years of the ratio gold to silver ounces is around 45, 50. Shorter term mean is probably about 60. And when you go through these precious metal cycles, you'll go from one extreme to another. And for the last 2, 3 years or more, it's actually been at the historic high end of the ratio. Gold to silver trending around 90 to even as high as 120, which is historic ratio. So that doesn't stay there. It reverts back, and it'll revert to the mean, and it'll shoot by the other way. In the last strong precious metals cycle, which went from approximately 2002 until 2012, that ratio went from, I can't remember what the high was, but all the way down to about 30. And today we're sitting, I think, around 90. So a long way to go. And this is a really great chart because this shows we've switched now, and it's starting to revert finally to the mean. So that's why people get really interested in investing in silver, because when that happens, you got this explosive upside in leverage going on with the silver prices versus gold. And this is now just beginning to happen.
Was there a catalyst? Something happened in the industry between the beginning of the 1st of June to the first week of June. I mean, was this a matter of something happening, or was it just a matter of time?
It's a, I, I think it's a matter of time. I think
Okay.
that's essentially what it is. It, you look at the macro setup, you look at the history of in the cycles of these markets, and you know what's going to happen. And we've been predicting this for some time, being strong believers in the precious metal bull market and this switch of silver from gold to silver. You can rarely ever put your finger on a point where, okay, that was the event that made it happen. That's rarely the case. We had a run up last fall in October where silver charged to 35. It was brief, but held above 30. Really nice to set this up now. But at that point, you could argue that the impetus, the stimulus for that to happen was Russia announced that not only were they buying gold for the central bank, they were buying silver bullion for the central bank. And so, all these things accumulate. And then the big macro picture with the fiat currency, all the debt that the major economies are continuing to pile on, it just, and then you've got production constraint, like supply demand constraints coming on all at the same time. So this is kind of a perfect storm in terms of what's going to happen with the precious metals and especially silver.
Well, let's just talk about the gold silver ratio for just a minute. This is the gold silver ratio. Like you said, it's been falling because of the recent moves in silver. Let's just take a zoom out in longer term perspective, Jim. Over the past 3 months, it's been trailing between 91 and 100. It's fallen from 104. If you just zoom out over a multi-year perspective, though, I mean, the longer term trend over the last 5 years has been up, meaning gold's become more expensive relative to silver, right?
Yes.
So historically, the average has kind of fallen between 40 to 80, so about 55 or so, 60-ish.
Yeah.
But the longer term trend, ever since basically 2011, if you just draw a long median or moving average line, it's just been trending up. First of all, let's talk about why that is and why this could potentially mean revert to the historical, average. But basically, why has gold become more expensive relative to silver in the last 20 years?
Well, if you look at like 2011 was more or less the end of the last precious metal market. And so it's been trending up slowly over that time with fluctuations up and down. But when you come to the end of the precious metal market, people bail out of the sector, everything gets sold down. Silver's stronger. Silver's more volatile, much more volatile. And it's more volatile because you've got this big industrial demand. And then when you turn on the monetary demand at the same time, you get a squeeze and you get more explosive price movements to the upside. And then then all that eventually settles down. So it historically you'll see it revert to the mean all the time. That's what happens. It'll shoot to the other side, maybe get down to around 30 or even lower. Historically, it's been down as low as 10, 12. I think the crustal abundance of gold versus silver, the ratio is somewhere around 12 or 14. So for every ounce of gold, there's 12 or 14 ounces of silver. And so the other aspects that come into play that, especially I'd say the last maybe 6 years or 7 years, you've had a lot of the central banks buying their gold bullion positions as a monetary policy versus silver, and they don't pick that up. The central banks don't invest in silver so much. Now the Russian bank is starting that, so it's going to get very interesting. The last silver bull market, we didn't have that. It was more investor demand. So that could be a good reason of why that ratio has been just on the steady climb. Now it looks like it's flipped finally, and so it could be really explosive on the upside. And it could, in hindsight, it'll look like it's really explosive and happens fast in the moment. But in hindsight, it takes years for these patterns and things to build and happen.
Yeah.
So when we look at these things, we just look at the long term, sort of the long term view, the macros, and we get comfortable that this is where it's going. We can't predict the timing of that, but you get prepared for it.
The gold silver mean reverting, I mean, it could be silver going up or gold going down. I think what we've seen in the past 2 weeks is that the gold silver ratio falling does not need the gold price to go down. And in fact, like I showed you earlier in the introduction, gold doesn't have to do anything for silver to break out, which is an interesting phenomenon. In a bull market, silver typically outperforms. Let's just talk about the last 1 year, though. Gold has still, in the last 1 year, 12 months, outperformed silver. Are you surprised that in the bull market, silver being the more volatile asset hasn't outperformed gold? Like traditionally, it's had a higher beta. What happened this past cycle?
The higher beta hasn't kicked in yet.
Okay.
We're just starting to see it. I think this is the trigger. Like
Yeah.
this, somebody rang the bell, and holy smokes, now it's breaking 37. And when it tests the downside, it doesn't want to go down anymore. So yeah, I think this is it where the beta is going to kick in, and it'll begin to outperform gold.
I think
That's our belief.
some silver, well, that's, yeah, we'll come back to that in just a minute. Some silver investors have looked at the longer term chart of silver, and they're, understandably frustrated that it's not broken above its previous all time high, which was $50 an ounce. It's still moved up considerably since 2020. In the last 5 years, it's more than doubled, right? But gold has broken new all-time highs. It's made new all-time highs. I think people are wondering why hasn't silver, right? How would you answer that question?
Again, it hasn't kicked in.
Mm.
It's going to. So it's now breaking 37. About 37 and change is on a on the chart, technical analysis is kind of a barrier. It breaks that, it goes through 40. When it does that, it's not very far from hitting its old highs. And we believe it's going to get through that and it's going to go, yeah, a lot higher. We don't, after that, we don't know. We're
Sure.
not predicting any prices, but it's going to go on a new run into uncharted territory, just like gold did. It lags gold. It always lags gold. It doesn't go lockstep.
Yeah.
You can see the pattern of silver gold is very similar. One goes up and one goes down, more or less at the same time, most of the time. Till you see now this ratio break, gold, well, as you pointed out, they're still both going up, but silver's going up more. And that's what happens in the cycle.
Sentiment's an interesting thing. Even when prices are moving dramatically, you may not see a lot of attention in the press or people talking about it. How would you gauge sentiment right now in the silver space as we're speaking middle of
Yeah.
June?
Big shift. So
Okay.
we've been out drilling away on our project and raising money for it, and we're pretty close to the investing community and the institutions and everything else. And really, the only interest we've been getting since we started drilling our Columba project 5 years ago are from the resource funds, resource investors, high net worth people into resources already. Very interesting things started to happen about 6, 7 months ago. We start getting these calls from people, and we start getting in contact through other ways with the investors who are not mining investors, never been precious metal investors, but they've been maybe involved in the tech sector, taking a lot of money off, or maybe they've been in the Bitcoin sector and done very well. And now they're looking for the next big thing, the next asset that's really going to move. They're doing their own research, they're looking around, and they're picking up the phone and they're saying, "Hey, we've done this. We're looking for the next big thing. Made this money in these other sectors. We think from our research, next big thing, silver." And that's from several different sources, independent of one another. And this is all derived independently. So that started happening about 6, 7 months ago. So really interesting. And most recently, we could see interest building in the last couple months, building, and silver being tested on the downside continually, but holding above 30, 32,
Hmm.
forming a very good chart. And now silver's broken that bound range, touched 37, threatening to go through that and up through 40. And the switch has really turned on. And now we see funds that are coming in, generalist funds with big money, and they start at the very top of the food chain where the mining companies are, the big producers. We're kind of at the next level, then the
Yeah.
exploration guys are next after that. So some really big generalist fund money from huge, well-known funds has been going into these silver mining companies. You look at, we'll use IS Silver as an example. They put out $100 million bought deal. It was upsized, but we hear that it was 4 times oversubscribed, and these institutions coming in. So that is a shift. Obviously, these guys are very sophisticated with a very broad view of the economy, and they're moving into the space, or some of them are moving into the space. That's a big change.
What kinds of questions are these generalist funds asking you today versus the kinds of questions you were getting about a year ago?
Well, at our stage of the resource stage and develop, resource heading towards development, that's the stage we're at. We're a little bit off their radar, not much, but they we've had them looking at certainly looking closely at us. They want to get in the space, and they ask the questions the mining guys do. They
Hmm.
basically they're looking at your asset, they're looking at the potential for the economic viability, how big could this get, what are the probabilities of getting there, that sort of thing. So it's a classic risk assessment that they're making.
Actually, in terms of positioning for an investor, Kootenay Silver is an interesting place. Like you mentioned, you're kind of the mid tier. So, a producing company, we want the cash flow exposure, we want the proxy to the metal. A junior explorer, we want the potential upside for a takeout or the next big discovery. How do you sell yourself as a mid tier? Like, what is the investment case for a company of the size of Kootenay Silver?
Well, we've we've have we now have 4 different deposits and 4 different resource calculations, and gives us this enormous bank of silver in the ground. And we just put out a maiden resource on our most recent discovery, which is our best discovery to date in terms of what the grade is, in terms of what size potential is. 54 million ounces we just added to our inventory in the inferred category, and 282 grams, and really good widths, real thick widths of veining. And the widths, this is classic veins in Mexico, classic Mexican vein system. And the wider your veins, the lower your costs are going to be. So very important. So that's the growth at the drill bit. We're providing this brand new, exciting discovery. It's really gotten the market excited. We announced the maiden resource on Tuesday. By that evening, we had a bought deal of 12 million. By the next morning or next afternoon, it was an upsize to 17.4, and the demand was 2 or 3 times that size. So really well received. And the other 3 deposits already had between them and in measured indicated category, 314 million ounces of measured indicated, and almost 55 million in the inferred. Now we've added 54 more, and this new discovery is wide open in all zones. It's going to get bigger. We think there's potential for, on this one project, of 100 million ounces or even multiples of it, based on the geology, based on the drilling to date. All the zones that we've defined in this first ever resource in the project are wide open for expansion. We are now, once we close the financing, we will now have the money to go out and drill 50,000 meters of drilling, which basically doubles what we've done to date, and all focused on growing the size. So,
Okay.
sorry,
No, go
back,
on.
back to your question, what people invest in Kootenay for the 2 reasons. We've already got a huge silver bank in the ground. You got lots of leverage to the silver price because of that. Then secondly, the brand new discovery. So we're growing in a classic discovery growth story at the same time.
How does how do the valuations of a company like yours work? So obviously when the silver price goes up, the net asset value increases as well. Is there another way to increase the net asset value besides adding to your deposits?
Yeah, well, yes. And silver price really drives it, of course. Adding more ounces drives it. And then at some point, you're going to say, we have enough ounces. We have to start proving the economic viability with economic studies. So
Hmm.
after this drilling and increasing the size of the resource we currently have, the next stage will be, all right, let's get enough resources defined where we can justify doing an economic study. And the first one is called a preliminary economic assessment. That's your first study. So we'll do this drilling, upsize the resource, determine if now we're ready for a preliminary economic assessment and do that. So then that's your sort of next stage of adding value, de-risking the project.
Mm.
And so you start to do your economic studies. Uh, what would the return look like? How many, out of your resources, how many could be actually mineable at a profit? And then if that's positive, you might take it to the next stage of a pre-feasibility, which is basically more the same kind of studying with more detail, actual hard quotes, reducing the cost risk. And it's somewhere in that process is typically when you'll get an offer from a mining company to take you out.
So let's say, I were doing an analysis on a company like yours. I have a certain amount of indicated and inferred resources in the ground. You're saying that, let's say I signed a value, let's say, I don't know, I'm just making a number up, $30 an ounce for these indicated and inferred resources in the ground. You're saying that the value of these resources will go up to, let's say, $35 or even $40 if, let's say, you prove economic feasibility without having to increase the size of the deposit. Is that how it works generally?
Yeah, that's how it works. So use real live numbers. We're probably trading around 20 cents measured or uh, silver equivalent ounce in the ground for
Okay.
all ounces. Um, we're behind many of our peers on that measure by about uh, 4 times. The new discoveries really got us on the radar and opened up a lot of eyes. And when you just look at the silver only component, we're about maybe one third of many of our peers. And in the silver, you look at the silver market now, and you can get a range of companies being valued from on a silver equivalent basis from like 15 cents an ounce in the ground, all the way up to $3 or $4. Some companies are really highly valued. Now the difference starts to become in the quality of those ounces. What could be more, what look more economic, of course. And so as you advance to economic studies and you're starting to show, hey, this could actually be a mine, you're suddenly going to be getting 3, 4, $5 in the ground for those ounces credit or something like that. And so all of a sudden you get this explosive upside in the stock price because of it. Every time you add value by reducing risk. So reducing all your risks. So what's the cost going to be? What's your grade? So what's the potential cost? Get your access agreements done. Find your water. Uh, make sure your recovery is good. Get the access agreements include local buy-in or buy-in from the local all the local people and everybody's on side. And so all of these steps take you a long way. We already have an access agreement for 24 years for
Yeah.
exploration and mining. Got really great local relationships. So these things you just don't say, okay, now we're going to do that. You've got to be building that stuff right from day one.
It's an interesting time to be speaking with the silver CEO because going back to the silver chart, this is literally the highest silver price we've seen since 2011. And
Yeah.
so I'm just curious how 2011 was a big bull cycle for gold and silver. I'm wondering how the industry has changed in the last 15 years. This bull cycle versus the last one 15 years ago. How have operations changed? How has corporate strategy changed? And fundraising, how has capital raising changed?
Yeah, so there's been, quite a few changes. Of course, with inflation, the underlying costs have gone up. But for the operators now, they're enjoying tremendous margins in the silver gold space right now. So you're seeing these companies start to accumulate a lot of cash, and they're going to want to deploy that. So you get a project, get a positive study on it, and they're going to want to have those kind of projects. So that's where we're pushing it. So that's one thing that's going on. Another thing, if you look back 15, 20 years on the investment side, as a junior exploration company, you could tap capital markets easier for earlier stage projects than you can today. So earlier than we are. So we're at discovery stage. We've got resources defined. So, but if you're more grassroots, 20 years ago, 15 years ago was much easier because a lot more money was managed through brokerage houses, which have now been more or less taken over and controlled by the banks for the most part. And they've moved their money management, their these accounts into money management. So there's less high risk money out there for juniors. And so it's become more institutionalized and bigger money. So when you do get to a stage that Kootenay's at, the positive is that you can get access to a lot bigger capital. I won't say it's more easier, but you got access to a lot bigger capital now than you did before. But if you're at an earlier stage, it's become tougher. The regulatory environment in general, in any jurisdiction, has become tougher, slower, and just longer timeline. And so, we've got all our drill permits, and we're in the state of Chihuahua, Mexico. So it's been really good operating there. It's one of the best mining states in the country, and so we've got everything ready to go. As soon as we close this financing, we can be back drilling as soon as we can mobilize the crews in there.
Let me just theorize for a minute here. Is there a way to say that before you get to $50 an ounce in silver is the golden time to be doing M&A? Because past $50 an ounce, your project is probably too expensive for the acquirer. Does that make sense to you? Like people should be getting in on deals now, or even before when it was still $20 an ounce?
Yeah, as a place to invest, if you're interested in having silver exposure, yeah, you certainly now is a really good time. Earlier was better, of course, but you have to have the stomach to wait a long time and be disappointed a lot
What is
because
this M&A landscape like right now versus 15 years ago when it was higher, or even 5 years ago when it was much lower?
yeah. So on the M&A, uh, I would
Is
say
M&A dependent on price first
no,
and foremost?
no, it's not.
Okay.
M&A is driven by it's driven by a number of things. First of all, if you have an asset that can be made into a profitable mine, that's number one.
Yeah.
Something's going to happen. If it just so happens that, as you mentioned, the silver price takes off and we just become too expensive for someone to acquire, then you end up building a mine yourself. That's what happens. And eventually you'll be taken out. If you look back historically, Mexico in the last big precious metal market, mine finders did a great job of being really fully valued or having a premium in their stock. But what that meant is they always were a little too expensive for big mining companies to take them out. They ended up becoming a producer, producing for several years, and then being taken out by Pan American eventually. Silvercrest, same similar thing, more recent. Kept a really good price in their stock relative to the market, and eventually just got taken out by Coeur after going into production for I think about third year of production, making lots of money. And so the one difference from 20 years ago, you would had probably more players, a number of, there has been some consolidation and a little more concentration. But one thing is, for silver producers, there's not a lot of quality silver deposits out there to take out. So it's a much smaller universe than, say, gold, and much, much smaller than base metals. So that creates a very interesting dynamic for the silver explorers as well.
Yeah. Has the Trump administration changed operations at all, especially with the trade war? We spoke before the election.
Yeah, from our perspective, no, we haven't seen any impact from the exploration perspective in Mexico. We're not. producing a product
Mm-hmm.
that's subject to any tariffs or anything. So
Mm-hmm.
the only thing that we could see would be some maybe input costs are impacted, but we haven't actually seen that yet. So right now for us, we don't see an impact. There is an impact in the industry though. Mexico just announced a program, a lot, sort of a cooperative program here for mining in Mexico with the different mining agencies, mining groups in Mexico, some of the mining companies, some of the states, where they're focusing on producing their own critical minerals. They're focusing on what they call sustainable mining, which means mining in an environmentally responsible manner, but also really investing in the local communities, which is happening, really happening anyway with the mining companies I follow there. I was associated with forming Alamos Gold 25 years ago, and I haven't been with that company since 2012, but we went from this remote town in the Sierra Madres, built the mine. There was no medical facilities there. There was no water treatment there. Uh, Schools weren't in very good shape, very remote, no opportunity, and built that mine, started investing in the local community, built schools. They put students through college um, with sponsored students through post-secondary education, through scholarships.
Yeah.
Well, there were children born at the mine medical center with the mine's doctor. They've since built new schools and medical facilities. And there's people who were raised in the local community, went through post-secondary education, and then returned to work at the mine. Now, how fantastic is that?
Well, you're doing good for the community, so we appreciate that. Okay, what are the next
I got
milestones
off
for?
track there, but it's a good mining story, and it's also the point is that they're now promoting more of that and working jointly.
How would you describe your relationship with the locals?
Well, really great relationship. Got we've always maintained that in any of the projects we've been on. Our team in Mexico is excellent. Our staff is basically Mexican staff. That's it. We've got offices in Mexico, in Hermosillo, and our people there, our team is really great at going in, developing good relationships, listening to the local people, what the concerns are. We address anything that needs to be done. We help where we can, and we've got our access agreements for Columba in place. We've got, in fact, a 24-year access agreement for the core of the property. And so great relationship there, built, developed.
I just want to share some comments from our last video here. This is, I love doing this. Full of skeptics last time you were on. $58 silver. We've been hearing this since 2009. We've been hearing this for decades. David, did you not see silver price today? We're not even at 27.98. How does it feel to be right?
Well, it's it feels good to be right. Short answer.
Are you okay? Are you doing anything differently with your company now at $37 an ounce versus last year when we were barely at 30?
No, 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 we're not. We're very focused on the job ahead. We know what it is, what needs to be done, and we our objective. A year ago, we were in the middle of a drill program, finished a program, put out the
Yeah.
maiden resource, and see how that looks. Finance the next phase, and keep increasing the size of the resource, and that's what's happening.
It just occurred to me a lot of silver's demand is industrial as well as commercial for jewelry and consumer purposes. Is it possible that people are rotating money into silver products, physical silver products, because gold is just becoming a little bit too expensive for some people? Is that an explanation that works?
Yeah,
Does that make sense?
you get you get certain parts of the world that are big into silver jewelry, and it's traditional, it's social. And in a way, it's also an investment at the same time. And you get a lot of people buying bullion. And you got some of the mining companies. Look at First Majestic. They just bought their own refinery several months ago, producing their own bars. Guanajuato Silver is producing their own bars and selling them. And people who want significant amounts of bullion delivered, it's really hard to get their hands on it. So there is a real tightness in supply. That's very real.
Well, the gold silver ratio is at 90. If we, yeah, currently at 90. If we revert to the mean of around 60, that implies, um, at least 100% upside. I think if my math is correct. So the industrial demand is a story. Any other catalyst from the supply side or even the demand side that would take silver much higher, even without gold moving?
I think the real catalyst, yeah, the real catalyst is on the demand side for monetary demand. And when that turns on, you get a real tightness. And then that kind of becomes a
Yeah.
self-fulfilling thing. Is people are sitting there looking at it, wondering if they should buy it, and then it starts to run, and they start to buy it, starts to run more, and more people are now paying attention and wanting to buy it, and on it goes. It's a lot of our markets are tied to human
hmm
nature so much.
Let me ask you. Let's say silver reaches $100 sometime in the next 5 years. I'm not saying it will, but let's just suppose it does. Triple digit silver. What would you be doing as a CEO of a mining company? I mean, would it make sense to just start producing silver at that point?
Well, absolutely. I mean, this new Columba discovery could work at almost any silver prices as soon as we get it to enough size to pay for the capital build. It's that kind of discovery. So
Hmm.
you'd want to be producing that, certainly. The two of the other three deposits that we have starting to look pretty interesting at today's price. So if you were at $100, yeah, they'd be probably all, we got four deposits now, they'd probably all be in production.
If okay, well, that's a good place to be in. I mean, if somebody were to approach you today and offer you a check for your whole company, I mean, what is a premium that you would entertain? Let's put it that way.
See, today, yeah, well, that's a good question. It'd have to it'd have to be so much higher than the stock price is now because we're so undervalued that it wouldn't be even realistic for somebody to make an offer here. And it'd be
Hmm.
bottom fishing and it'd be very hard to accept even a 50% premium rate today.
Well, especially since you have the option of eventually producing yourself down the
Yeah.
line with your projects. Okay, good. Where can we learn more about your company in the meantime,
Well, we
Jim?
trade on the Toronto Venture and
Okay,
KTN, and we trade on the QX over the counter in the States, KOYF, and we have our website is kootenaysilver.com.
excellent. We'll put the links down below. Make sure to follow Good News over there. Thank you very much, Jim,
Thank
and
you, David.
congrats again on a successful year. We'll speak again soon.
Yeah, thank you.
Thank you for watching. Don't forget to like and subscribe.